Welcome to the IdeaGen Global Future of Summit live here in Washington, D.C. I am honored and privileged to have with me here today three incredible leaders from across the planet, starting with Mark Fitzgerald, Kpmg. Welcome.
Always a pleasure, George. Thank you.
Thank you, Mark. Dave Grimaldi, Blockchain Association here in Washington, D.C. Big week, a lot going on here in Washington on blockchain. Best of luck.
Big week. Thank you, George.
And former White House colleague, Matt Lira, who's now leading up Invest America. Matt, welcome.
Thank you. I'm looking forward to the conversation today.
It's going to be a great one. I'd like to start by asking, for the millions of folks that will be watching this program on IdeaGen TV, just a brief introduction about what you're doing, starting with Mark.
I'll try and be brief, but thank you. So I focus entirely on our international development support for a firm globally. So that's the UN, the development banks, nonprofits, etc. One of the things the firm really invested in and has embraced is we think we have not only ability to support the Sustainable Development Goals through our philanthropic efforts, through our individual efforts, because we've got 255,000 people in the firm globally, but more importantly, through our services. So we have an obligation through our services to understand the ethics about what we do and how they are supportive of the SDGs. So a big part of what I do is focus on that.
Thank you, Mark. Incredible mission.
Never a dull day.
Never a dull day. David.
George, thank you. Blockchain Association is about 114 companies from all corners of the cryptocurrency, digital asset, and blockchain ecosystem, from venture funds, crypto mining companies, NFT providers, exchanges like Coinbase and Kraken. And for a nascent startup-ish industry, we are the eyes and ears and interface with the federal government here in DC. So Congress, House, and the Senate, the White House, the agencies, et cetera. And it is an interesting time as the market turns around for digital assets for us to be advocating in front of the chief policymakers and regulatory agencies. And it is a heck of a year following a very, very crazy and turbulent year, but it's fun. It's fun and it's adrenaline, and I think it's the future.
It's fun and it's the future. I love that. I love that optimism, and I agree with you. Yeah. Matt.
Well, thanks, George. So I'm working on a program we call Invest America. And essentially, it's a coalition of policymakers and business leaders and activists to try to create new ideas that will expand financial literacy, enhance economic mobility, close the wealth gap, and help build a sense of unity in this country in support of our free market system. One of our initial ideas that we're most excited about is something we call Invest America Accounts, which we can get more into in a moment, but effectively it would be to create an investment account for every American child at birth, seeded with $1,000 from the federal government, but then after that, entirely funded by employers, friends, family, and philanthropic organizations. And we can get more into the benefits, the reasons for that, but we're building out an incredible coalition, as I mentioned, and we're just really excited to be taking it on.
Well, I can't think of anyone better to take on that initiative than you.
Thank you. I'll try to live up to it.
No pressure.
Yeah,
no
exactly.
pressure. No pressure. And so, as we look out at Washington, literally, you think about two words: trust and transparency. Buzzwords from Mark, I know, at Kpmg. Trust and transparency, blockchain, Invest America. Why are those words so important, especially within the financial sector? And how do you, the three of you and your organizations, promote these qualities to your stakeholders and the greater communities you serve to act as stewards for ethical and transparent impact? Mark.
Trust and transparency obviously are both sides of the same coin. You can't have one without the other, is our view. So in a number of different ways, we have clients that are either public sector clients, or they might be corporates, they might be nonprofits, and it applies to all of those, but in different ways. So we've seen the trust indicator change for each one of those actors. 10 years ago, government was pretty high on the trust indicator. that has eroded over time in a number of different countries. NGOs has kind of stayed the same. Corporates is up and down like a yo-yo, depending on the point and moment in time. And the reason for that, some of it is public sentiment, and that's driven by the perceived lack of transparency or the reality that there isn't transparent, because there are two different things in terms of how that manifests itself. So if you think about the capital markets, there is a perceived transparency there, and that's then supported in real terms by audited financial statements, which is where firms like ours comes in. You have to have that to promote the accuracy and credibility of what's being presented. But the perception gap has kind of widened. There has been a erosion of trust with respect to some corporate failures, et cetera, not just in the US, but worldwide. So why is that, and how can that be helped in the future? And then when you move into governments, the issues are so much more nuanced, so much more widespread. But if you don't have transparency with your citizenship, the trust is immediately eroded, because that silence will be filled with something else. And that has been amplified in recent years because of social media, et cetera, et cetera. So where we see a role for a firm like ours is understanding where those gaps are. Is there a role to play for the individual actors? Is there a role to play for government around regulation? Is there a role to play with consistency of approach? And how does that get operationalized?
Incredible. Incredible. What a great description. Dave.
There are two words that are intersecting on a daily basis in the crypto and blockchain world: trust and transparency. Transparency is in the bedrock of digital assets and a distributed immutable ledger. The blockchain allows you to see transactions, where they go, who holds accounts. You can follow illicit actors along the blockchain, unlike traditional finance, where criminals can get away with money transfers on a variety of different methods and scales. Blockchain technology helps with that. We partner with law enforcement, FBI, DHS, et cetera. We allow smart contracts to be executed so that people can see where their money is going or where their assets are going. And so that transparency is there, and that is something that this kind of peer-to-peer global system is based on. We're gaining trust. We had a bumpy 2023. We had a single bad actor, a fraudulent actor in the form of the founder of FTX, who really put a bad stain on this industry through his own actions, through his own ill means and deception. And here in DC, that sort of thing takes trust away. We, especially at Blockchain Association, we are seeking to rebuild that. The market is turning around. Bitcoin is trading at all-time highs. It's now an exchange-traded fund. But the trust needs to be regained, especially for a nascent new technological industry where members of Congress are hardwired to possibly not trust technology, not trust what happens with consumer personal information. Is it sold? Is it monetized? Where does it go? But blockchain tech and ledger technology has that transparent piece to it that I think is going to be the future of global finance. And it is going to be something that becomes a trusted, relied upon system.
I have a follow-up to that, because and only if you can answer it. So technology in general, social media, that's also played a role as parents and otherwise in terms of the trust factor. Does that play in somewhat into the whole blockchain situation? And because it's more reliable and more transparent, do you also describe it that way?
The corollary is a good one. It's intimidating and difficult to understand because you are dealing with the ownership economy right now. And for an older generation, the trust with traditional financial institutions is something that they can go to bed at night, be comfortable with, relying on it, et cetera. Blockchain and crypto technology enables this next wave of the web to put your possessions and your value in your own hands. If you lose your password, you're not going to have access to it. There's not a forgot your password option. So that's a little scary, a little intimidating, but at the same time, it's massively empowering because your assets are yours. You can put them on a thumb drive. take them to an island in the middle of nowhere, and they are yours. They can't be stolen. They can't be misappropriated. They can't be taken by a failing bank to go do other things with. Think of a war-torn country where you put your money in, you can't get it back out. That ownership element is empowering, but at the same time, you have your own responsibility. It's completely on you to take care of your assets and your possessions. But this is the next wave of the internet. This is Web3, as we call it.
Incredible. That's incredible perspective. Incredible. Matt?
Yeah, so I think that the ultimate form of transparency is firsthand participation. Because when you are participating in a thing or an activity or an institution, you have your firsthand knowledge to know that, what the ground truth is of that reality. And one of the chief challenges we have, and I would argue in American society today, is that there are too many people who feel like they're on the outside looking in. And some of those people are actually on the inside. I think we do generally benefit collectively as a society from our innovation ecosystem and from our economic engine. But nevertheless, and then there are those who are generally on the outside of that. But far too many people are either outside of the process or feel like they're outside the process. And so it's our view that the ultimate form of that transparency is, again, to bring people inside the system so that they feel like that genuinely they are a part of the economic upside of the innovation ecosystem in this country. And so, again, our proposal around creating investment accounts for every American child is one form of doing that. But there are other ideas that are floating around. But ultimately, the more we can make people feel through their own participation, through their own lived experience, that they are benefiting from the economic innovation in this country, the more their trust in our institutions, in our economy, in our broader free market system will increase. And candidly, if we don't take somewhat dramatic policy interventions now to change that perception and that reality, the kinds of concerns that you're touching upon earlier in terms of rhetoric and inflaming of divisions, they become even more palatable in the decades to come. And so we believe that direct, purposeful intervention is required to bring people in and to rebuild that trust that people feel. And if you go back historically, the times when the trust in our country has been the greatest are also the times when economic mobility has been the most at hand for at least most American citizens, of course, not all throughout history. And so therefore, I believe that, again, our idea, which we can touch on in a moment, is a way to do that. But we're really excited by the possibility.
Incredible. And that's an incredible vantage point as you think about this in its totality. Mark, trends. So what are these trend lines? You're seeing so much data coming into Kpmg, and you're helping to advise and to assist clients, like you said, all over the world. And so what are these trends impacting the finance industry, and how is Kpmg adapting? Like, how are you adapting to these trends and implementing strategies to stay ahead of the curve?
So my comments will probably focus and be more relevant to the emerging markets context, because that's where I spend a lot of my time. But there are some generic trends for sure that just apply differently in different markets. So digitalization is in the top three. Sustainability, climate, ESG, whatever way you want to phrase it, is still there. And despite the kind of noise or lack of noise in the US market, but globally that's still in the top three. And the third is customer base. And that can mean a lot of different things to a lot of different entities. So for governments, it means citizenship and how they connect and how they transparently connect and operationalize their systems with the citizens. With corporates and the financial markets, it's about financial deepening. It's broadening their suite of services. It's about fintech, for example. It could be about how you leapfrog the lack or exposure of financial products available to those who are underserved, using technology into a more advanced state, even more so than here, because they just have an ability to leapfrog far more efficiently than established markets. Or it could be all of the things we touched on before. How do you improve the regulatory environment? How do you improve a conducive environment for domestic mobilization or foreign direct investment? How do you create those economic drivers in various economies? So you put all of that together, digitalization is still at the center of all of it. Depending on the different actor, it's central to both private sector, capital markets, corporates, both local and international, and then also the governments as well. One additional thing I would mention, George, is underpinning all of those is core financing and insurance. There's a heavy focus in emerging markets on unlocking capital, trying to create a pipeline of sustainable or investable opportunities. That's clearly a priority. But if you don't create a sense of de-risking and a conducive environment for those investments, which is where insurance kicks in, it kind of undermines that progress. So you got to do both. So that's a relatively new trend, but it's something we're seeing the large development banks focus heavily on in the last year or so, and then larger corporate financial institutions as well. And the last thing I'll mention, I'll come back to why I think climate and sustainability is still at the heart of those top three. Outside of the US, the regulation environment, say in Europe, in parts of Asia, and increasingly so in LATAM and Africa, it's being driven by those regulations that it's becoming imperative for corporates to prepare, or if they don't, they will not be compliant with their local markets. So we're behind here. SEC have issued guidelines for reporting standards around sustainability in the future, so we're catching up. But we're about 5 years behind in the US. But there's a lot of reasons for that. We don't have time to unpack here, but I would say globally, it's still top of the agenda.
Top of the agenda. Incredible. What perspective? And those trend lines are not changing, right?
No. So there's a whole other sub-discussion, George, around risk.
Right.
What that means today versus even 5-10 years ago. It's completely changed.
Stunning. Speechless.
But I could turn that and be optimistic. So,
Okay.
and I'll come back to you on that.
Okay. We'll flip that. And speaking of optimistic, blockchain. How is blockchain in general transforming the finance sector?
Many, many ways, and under many different umbrellas. Start with decentralized finance, the lack of the need of an intermediary or a traditional financial institution to process a peer-to-peer payment. Me sending you money, a 3-day delay, can only send a certain amount. Blockchain, it's instantaneous. Decentralized financial networks enable that. New stores of value, Ethereum, Bitcoin, other cryptocurrencies, new places to invest, to build wealth, to transfer, to trade, again, to do it in real time across the globe. So new stores of value are amazing. Tokenization of real world assets, your art, your securities, your real estate. It can be done via smart contracts along the blockchain that self-execute. The code is built right into the contract. You give me something, instantly that contract effectuates. My value for whatever you gave me goes right to you. There's no paper, there's no signing, there's no need to hire a third party to do it. Happens right away. Security, transparency, we talked about a little bit ago. Immutable distributed ledger technology that shows where things go, when they go there, etc. And that movement along the blockchain can enable you to do fractionalized payments. It can enable you to put different pieces of your investments to different pots. You can help with family wealth building, etc. All of it is very powerful and very wonderful. And a lot of token and Bitcoin mining is done through the new ways of extracting energy and putting it toward computing power. It is the gathering storm in the United States right now with the advent and rapid development of AI technology, the use of software development, the amount of time that people are on their laptops every day using compute power to generate new things. Where is that energy coming from? Well, Bitcoin mining showed how wind and hydro and solar can be used to power computers to do high-speed, complex algorithms, problem solving, etc. The new arms race is, where is that energy going to come from? In the US, you can't say, well, a mile away from here, there's a field. Let's put a giant new solar farm there and create massive scales of new energy. That can be done in other countries. That can be done in China. That can be done in the UAE. all over the globe, we have zoning requirements, environmental laws. They're all good. They're all well-meaning. But that energy and compute power race is just going to increase. We have kind of developed a new technology and a new way of harnessing that and using it for blockchain and crypto technology. It is, but the pieces I would leave you with that I mentioned are that instantaneous remittance payments that can be done south of the border to Central America here, anywhere around the globe, pegged to the US dollar via stable coins, which are now being adopted at a rapid pace. And crypto and blockchain usership is going up by orders of magnitude. Every survey, every poll, it's now an election issue. So there are votes to be had now for public officials who say, I am, 2 words, only 2, open-minded about this new technology. So we're optimistic, as you said, George.
You know, I can't even, I don't know what to say. I don't know what to say. It's so transformational between AI and blockchain and everything that's happening. It's, you know, it's just happening at warp speed. Are we keeping up with this change? I mean, this is really to the 3 of you.
It is what I'm living and breathing right now. There are not laws on the books in the United States Code, statutes and regulations that speak to this industry. That is creating uncertainty and fear among developers, entrepreneurs, and venture funders. So the US needs that regulatory certainty. We are all over Congress to define those key terms. What is a token? What is decentralized? What is this and that? And then to hand it to an agency, Securities and Exchange Commission, Commodities Futures Trading Commission, give us a central regulator. It's what we need.
Is there a place where there is certainty on the planet?
Yes, other countries and other jurisdictions are looking at this from a innovation, entrepreneurship, and capitalistic perspective. Give us America, give us your next Apple, give us the Google of blockchain. We will welcome them here. We will tell them how to develop and code and write their technology so that they know how to do it so that they can thrive. In America, we don't have those laws yet, and that is making the next big thing, the creators of the next big thing, look at Europe, right? Look at Asia and say, if I go there, I know what I'm doing.
So we're at a disadvantage here in the United States for this.
Unfortunately, currently, yes, but I think that that's going to change as we grow. Yes.
Good. Good that it will change. Good that it will change. Thank you. So Matt, there are critical issues facing the finance industry today, especially in relation to the U.S. economic policies and investment. How or what you're working on can solve that? How can that?
Yeah, great question. So we kind of see, well, I mean, there's a range of different problem statements. I think we typically boil it down to 3, although there's a bunch of ancillary second-order positive impacts beyond these 3. So the first is financial literacy in this country is a disaster. FINRA did a recent study. Only 15% of Americans could pass a basic test on financial literacy. And to be clear, this was not questions like how to run a hedge fund or a large multinational firm.
Or what is blockchain?
It was like, well, not even that. It was like, what is a savings account? How to balance a checkbook? How does an interest rate work on a mortgage? 15% could pass of American adults. So, we have a financial literacy crisis. This leads to all kinds of bad decision making across the country at every socioeconomic and demographic group. Number 2, there's a feeling, like as I mentioned earlier, that people are on the outside looking in as there's enormous wealth creation through new technologies like blockchain and AI, the sharing economy and the rest. People again feel like their livelihood is being disrupted. The certainty in their life, their pension, their wages is being disrupted, and then seeing other people getting rich and they don't know how to get in on that game. And so that's creating real resentment issues. Support for capitalism is collapsing generationally inside the United States in a bipartisan way. So if you could say, well, young people are always more doubtful of capitalism and free markets, which is true. As they get older, they tend to become more economically conservative. But even comparing 25-year-olds in Gen Z to 25-year-olds when they were millennials to 25-year-olds when they were boomers, et cetera, it's just an absolute collapse in support for free market entrepreneurialism and capitalism in this country, driven by the issue I just raised. Specifically, so you could say, well, maybe it's just progressive students. No. Even amongst Republican young Gen Z members, a majority of Gen Z have doubts about capitalism. And so this is a massive shift in the perception of the United States internally. And if we don't get ahead of that, I think it creates the opportunity and the opening potentially for some positive reforms, but it also creates a very dangerous opportunity for extremism. So financial literacy, restoring faith in capitalism, and then lastly, I think about just economic mobility and closing the wealth gap. Warren Buffett says it's a cliche, but it's true. If you want to build wealth, just have a really small snowball on a really long hill. And everyone sort of wastes the first 18 to 20 years of their life. Even some of the highest end performers who are maxing out to their 401ks in their first year out of college, which is a rarity. But even they are leaving, a lot of people are leaving the first 18 years on the table. And of course, given my first data point on financial literacy, if you're not learning this in your household, you're not learning it in the schools. Mm-hmm. And so we think that there's a way to give people that first 18 years of compounding so that they can actually begin to generate wealth. And again, my view on transparency, first party lived experience. Imagine a world in which every single American child has an investment account, to be clear, in a very safe passive index like the S&P 500, so they're not getting into the day trading. And every year they're in class and they pull out the app with the teacher who's like, well, let's pull up the performance of the fund over the last year and let's learn a little bit about this. And you're entering the workforce, either at age 18 or out of college a few years later, and you've seen compounding work firsthand. It fundamentally changes your decision-making about how you save for your household for the rest of your life. And there's an argument by some that, well, this will disproportionately benefit people who have more assets, which of course, you have more assets, you can invest more. But there have been experiments of similar ideas and approaches around the country for several years. One most notably in my mind is Oklahoma Seed. And what they found, again, through their actual real-world experiments and pilots, is that savers save. And once you created the account, people, regardless of their position in the socioeconomic ladder, were more likely to save, just because you had the account. It's what we call, and welders would call, the cold start problem. The act of creating an investment account or creating a savings account is intimidating, particularly if you don't have financial literacy background. And it feels like, am I entering a casino? I'm about to get ripped off, like all these questions. And so having a trusted launching pad to get in the game, people begin to see the financial returns and they immediately begin to change their behavior. And again, regardless of whether they're from the wealthiest families or they're from they're less well off economically. And so again, throughout the career in public policy, as we've talked about in the past, there are occasionally ideas and challenges that bring people together because different stakeholders take different routes to the destination, but they all in the same place. And for some people that we're working with, they're excited about saving capitalism. And for some people, it's about closing the wealth gap. For some people, it's about financial literacy and introducing people to the new areas of finance, whether it's on the blockchain or any other innovative sector. But ultimately, they all kind of lead to the same place, which is we've got to find a way to get more people into the game earlier in life. And so that's what I'm excited to be working on. Love that.
Yeah, love that.
And I should note, to your question about trends, if we don't have an intervention of some kind, whether it's our idea or someone else's idea, the natural trend line goes to very negative places. Okay. So we've got to do something. We've got to do it now.
Do something, do it now. Mark, finance going forward in terms of technology integration and regulatory changes, what roles do you see accounting firms like Kpmg playing in shaping that future?
I'll go back to that in a second, George, if I may, but I'm going to validate a couple of Matt's comments and tie a few things together. We support a lot of big schools, clients of ours in the US, and with every good deed, there's always perils. Yeah. So NCAA allowing likeness to be supported in kind of rewards and recognitions, that's good for the college athletes, etc. But many of them were in that cohort that you've described. Yeah. What to do with that money? Some of it is relatively limited, might be 5,000, 10,000, but some of it is very significant sums of money. So some states have been very progressive in kind of endorsing and then passing legislation to say, if you are going to create wealth while you're at a state school, we have to provide as state schools financial literacy programs to those kids. So you're starting to see other state schools do that, regardless whether there's any legislation or regulation around it. So we're beginning to see that interface between the need the delivery of the need around literacy, but also avoiding the obvious pitfall that if you give a lot of money to people who don't have a background in managing it, there are obviously implications for that. And it's been driven not only by the actors themselves in the state schools, but also state governments as well. So there's a number of actors playing in there that I think touches on a number of things you just mentioned. George, back to your question. Thank you. So the obvious one, George, is going to be how do we play a role on two fronts? One is maintaining the credibility and robustness of the capital markets. We're only one pillar, but we're an important pillar. So if the public writ large doesn't have trust in the transparency and what we can offer, either through statements and earnings reports or financial statements or other elements where attestation is required depending on the country and the listing requirements in those countries, it ultimately erodes the trust in investing in those capital markets. So that's never present, and that will continue. Where we see a trend, a positive trend, is going to be in some of the areas that we touched on today, is how do you embrace technology to improve the accuracy? How do you improve the efficiency and timeliness of those certifications? And then, of course, the access to them. So it kind of demystify that access, because anyone who gets investor pack in the mail, you open up this thick book and say, well, what does this mean to me? It's just a lot of words. Right. And what can I practically do to influence that stock that I've invested in? So technology can help with that, and that interface certainly improved, and we do see that as an improving trend. The other one is going to be about a true holistic view of where risk lies in the capital markets. And this is where sustainability comes in. This is not going to be a political issue. It's not going to be a woke issue. It's going to be a business issue. It's realizing itself daily based on both natural disasters, humanitarian issues. There's also issues around different jurisdictions and regimes in those jurisdictions, nationalizing or otherwise, or undermining those capital markets in those jurisdictions. These are not new issues. They're just accelerating. And the impact of them is obviously compounding over time. So the ability for governments and other regulators to say, this is the baseline we expect you to report on in risk around sustainability and all its facets. So this is not a green-driven movement, although there's elements of that here. Sure. It's truly about risk. And what is the longer-term prospects of that corporate, depending on what they determine as their risk profile going forward. For example, the extractives, they are playing both sides now. They will continue to extract from the earth. That's core to their business model, but they're also investing heavily in other forms of energy generation and that's right, and production. You've got to do both, because if you don't, the markets are looking 50 years out, 70 years out. They're not looking just 4 or 5 years out. So the pension funds invest on that sort of timeline, other institutional investors, etc. So it's there despite all the political noise, and it's an ever-present trend that is definitely tightening. The obvious thing, George, is if we don't do that, then it's open season. Then it's the Wild West. Then everyone's going to be self-serving. Everyone's going to create their own set of standards. Right. And that helps nobody.
That helps nobody. That helps nobody. And so back to blockchain. Dave, what are the next big developments in blockchain? What do you envision? What do you see around the corner coming at us from blockchain that could revolutionize the financial systems? And what inherent challenges need to be overcome to achieve widespread adoption?
The second part of your question first, we have amazing companies leaving the US on a weekly basis. We really want to start the next decentralized social network here, where your social profile and the stuff that you post, many friends, great workers at the big tech companies, but they take your content, they monetize it, they own it. There's a management structure there, a board of directors, etc. Decentralized social networks are, you can get a percentage of that. It's your content. It can be verified when you put it online. When you put it, on the blockchain, on and on. That's another giant wave that's coming. NFTs are becoming more and more creatively unique. People have them on their Apple Watches. People have them on their screensavers. They trade them. They talk about them. Their LinkedIn profiles. That could be their NFT, maybe an image of them or another one. All very empowering and all very special to people. But we are losing those innovators because we just don't have that regulatory certainty, which is really plaguing our industry right now. So we're hard at work here in DC trying to convince lawmakers to kind of see the upsides of putting us under the umbrella of a independent agency, an independent financial agency, be whatever it is. But everything else is taking off. The use of smart contracts, the use of DeFi. Bitcoin is now an exchange traded fund. We got a Bitcoin ETF earlier this year that was approved. The price of Bitcoin doubled in value. People are now being able to maximize it in their investment portfolios without having to open up a crypto exchange account. All of this is taking off. So I would imagine next year this will be a very, hopefully, different and a bigger conversation even than now.
You know, can't even imagine. Can't imagine where this is going, but it's exciting that you're working on it. And I know if you have anything to do with it, we'll have a solution.
Keep hope alive.
Keep hope alive. Thank you, Dave. And so, Matt, final question. What type of investment strategies are you implementing at Invest America to curate your options and create maximum impact?
Yeah, well, we believe very strongly in again, for passive investments, at least for our perspective. I think, again, we call it the cold start problem, just getting people into the game.
Any blockchain?
Well, it'll be up to the policymakers and our
It goes back to the
give us some more flexibility to negotiate. But I think that our view is it should be passive to avoid gamification. You don't want we were talking earlier, we prepped for this panel. You don't want fourth graders, day trading meme stocks. But I think there's an idea of just getting people. We use the S&P 500 passive index funds as a potential role model, but there's a lot of options for that. And, it's something that's very safe, very conservative. The S&P, one of the reasons we use it as a placeholder, 75-year history of pre-tax 11% return on an annualized basis. As long as you have enough time horizon, which of course someone who's 0 years old has, you're going to have at least a history of good returns. But once people are in the game, they're more likely to open maybe a taxable account in addition to their personal, tax advantaged accounts and try other forms of investing, which tends to be the case, with other, whether it's with, blockchain and perhaps even ETFs in the future. If you have any advice on altcoins that I should take a look at, we can talk after the panel. But no, we're just excited. I mean, far too few people own assets that compound, and those numbers are, again, not to be pessimistic, but they're trending in the wrong direction. And so that's why you see the wealth concentration that you're seeing both in the United States and in other large economies around the world, and we want to change that trajectory. So
let me ask you this final lightning round, Matt. What is your final call to action for our global audience? And how can folks find out more about what you're doing?
Well, that's the second part first. We have a placeholder website, investamerica.org. You can reach out to myself at all the expected social channels. We have an X account, InvestAmerica24, which is a good place to reach us. And we're happy if anyone's watching and they want to get involved, please reach out. We formed a CEO council. It's not a board of directors. It's just people who have raised their hand and said they support the idea and that they're interested in building it into the HR packages of their companies. And so we'd love to talk to people, particularly from that cohort. And then to answer your first question, a slight deviation, but related to what we do at Invest America is we're sitting here and we're looking out over Washington. We live in a time of incredible cynicism about public policy and about political engagement, and particularly an international audience. They may look to the United States and say, well, what's going on there? Look, America has always had, as most vibrant democracies, periods of really rambunctious debate. Debate is a feature, not a bug, of a democracy. That said, we need to once again find the spirit to come together on the things that really matter and to work together to get those things done, both as Americans within our country, but also particularly the democratic societies around the world and our other allies, so that we can solve the problems facing the planet.
Thank you, Matt. Incredible perspective. Dave.
I mentioned it earlier. Be open-minded about this. It is complex stuff. Is it finance and banking, or is it technology and internet? It's actually in the middle of that, all of it coming together. People were hesitant about blogging years ago in the first iteration of the web. They could read content, but all of a sudden, I'm going to put up a picture. Where's that picture going to go? I'm a little nervous about that. Who's going to see it? Now it's mainstream. Everybody does it. Move into the sharing economy. Airbnb, Uber. I'm going to get in someone else's car. Wait, that's not an accredited taxi. That's weird to me. I'm not going to do that. Stay in someone else's house. I'll just go to a hotel. That's mainstream. People do it more than they ride their own cars or stay in hotels. The ownership economy is the next iteration of this. I'm going to have complete online control of my possessions, and it's on me to move them around and to use them for ways that I want. But that's really exhilarating and really big, that now I have my own piece of my own thing on the World Wide Web. So that's very big. And watch YouTube videos about what is a blockchain? How is a Bitcoin mined? What is an NFT? These things are really well made. Blockchain Association makes them, but there's tons out there that are unbelievable. And it takes about a nanosecond to get hooked on this and to get more curious. So that's all we're asking. Curiosity, open-mindedness.
And how do we find out more about Blockchain Association?
Blockchainassociation.org, all one word, theblockchainassociation.org, all one word, and we'll point you in the right direction.
Thank you. Thank you so much. Mark, final word.
George, I think I've mentioned to you before that I regard the SDGs as a kind of a code of ethics for humanity. And I still believe that. So despite all the massive challenges to achieve, or even to aspire to achieving the SDGs across all the 17 goals, my call to action is we cannot give up. We need to embrace that challenge and to do so over the 6 years that are left. But then there'll be another set of aspirations that we will continue to support and embrace.
Mark Fitzgerald, Kpmg, Dave Grimaldi, the Blockchain Association, and Matt Lira, Invest America. Thank you so very much. Thank you for your leadership and for all you're doing to change the world.
Thank you.
Thank you.